let me introduce you to one of the biggest angel investors in the country. And that's you.
My investing for realized, unrealized paper gains is much more, but like realized is over 62%. I did the maths, I think 2 weeks back. So that return I can't ever get from a public stock market portfolio, right? Because I don't know what's happening. I don't want to read like balance sheets and stuff. For angel investing, I mean, I got lucky, but I don't know many people around me who did. Like, reading and all the intellectual stuff that's already done, I think you will mostly be just catching up to what's already out there. To be ahead of the curve, I think you really need to observe. I need to find 7-8 other people who are interested in investing. I called up Sumit ki we will still invest. I will find the other 7-8 people to come in with me. I'll increase my check size. Let's reduce the valuation to adjust for the risk that's coming now and all of those other things. And we're still excited. I think it took me 10-15 days. I got people from my master's course to come invest with me. 7 of them total, including me. They're all multimillionaires now.
Hi everyone, welcome to the third episode of Beyond the Grind, a podcast where I invite people from different business backgrounds, from investing to founding to product to marketing, to learn from their mistakes, their successes, and their experiences in a tactical way so that you and I can apply these learnings today. In this episode, joining it with me is someone who has worked with Naval Ravikant to bring AngelList to India, has founded many micro VC funds such as iSeed and Galaxy, and is one of the biggest angel investors in India. He has now founded Offline, which is an exclusive community for top 10% founders in India. Not only this, he has created an incredible impact on the founders and the companies he has founded. This is Utsav Somani, and let's start with the podcast. Hi, Utsav. Thank you for coming onto the show. Now we have a name. It's called Beyond the Grind. And thank you for saying yes to this and coming here. Let me just tell you the story of how I ended up reaching out to you. I was in a class by Prof. Rama Veldamuri, and he was teaching us entrepreneurship and venture capital. Fantastic class. And I asked him to come onto the podcast to talk about angel investing as a career. He said, he declined, and he said that, Arushi, I'll not be able to do justice to this. Let me introduce you to one of the biggest angel investors in the country. And that's you. And since then, I've seen many people associate you with this title. So how does it feel to be one of the leading names in this space?
I actually don't like the title. I don't want to be the biggest in anything, to be honest. That's always putting yourself on a very high pedestal. But I've enjoyed this journey of angel investing. I think it's given me a lot, and I think it's the best form of pseudo entrepreneurship for me. I get to work with some of the best entrepreneurs in the country, learn from them about different industries every single day. That, I think, is the biggest privilege of this job, to be honest.
Wow. And how did you start this journey? Like, when did it start?
Super unconventional way of getting into this. Like, I studied innovation and entrepreneurship in my master's. 2 things that you should never sign up for as a degree. Sorry, prof. So started there. I always had the itch for technology and finance, but ended up in my family business, which was doing stuff in Africa. And I realized that's not for me. So that's when I quit and moved back. I was consulting for an online investing platform. So I started dabbling in angel investing little by little in 2014. Because minute you're sort of in the ecosystem, you keep hearing technology, finance, startups, hiring, engineers, all of that stuff. And you really want to be a part of this action and the energy, right? I mean, when you're a young person who has sort of credentialed himself with innovation and entrepreneurship as degrees. So 2014 made one of my first investments in Testbook, and that's how I know Prof as well. We co-invested.
That was your first investment?
One of my first, actually. I think it was the second, maybe, if not the first. No, the first one was something else.
But initial ones.
Very early ones. And that's how I became close with some of the other investors, because first time you're like excited, like going on a cap table with other people and spending time with other people who are excited about this business. So that's how we got started. And then my third or fourth investment was Sugar Cosmetics. And that's when like things really like, I mean, I got the hang of it. I'm like, this is fun. Like, I mean, you get to interact with so many different founders and learn about so many different industries. One is doing like online test prep, Testbook. One is doing Sugar Cosmetics. And they were called Fabbag back in the day when we invested. They've gone through their ups and downs, but now Vinitha and Kaushik have turned the business to a very solid state. So just learning about this, the energy was amazing. Like I was invited to networking events and all of that stuff. I was like, this is a fun business to be in. And I realized like all the things that were going wrong in the startup ecosystem. Like, I mean, to quickly identify a problem, I think spend time with it. That's what I learned. And that's when I reached out to Naval after hearing him on Tim Ferriss' podcast that the company that you build, AngelList, solves for a lot of these things in the angel investing space. So I reached out to him and then AngelList India happened. And then, of course, I got very, very active into the thing. Probably shouldn't have been so active, but here we are.
Super nice. We are going to talk about a lot of elements that you covered just now. But before this, how many deals you have done till now?
I think the number is close to 190. I think towards the year end, I think we should cross 200.
Wow, that's
Although the number doesn't matter. Like a lot of these rankings that come out in the ecosystem are like
the rankings based on the number of investments.
I think a lot of these media publications do that. This guy invested in 100 companies in a year or like 200 companies in a year. Like I think, I mean, the real return from angel investing is of course the impact that you've created. And the second thing is of course the financial returns, which do not get published, right? So you might have invested in 500 companies, but you might be making a loss on all of them. So I think end of the day, the real metrics, which are mostly private by default, are the numbers to look out for, are the returns and money generated, impact created, all of those other things. So I wouldn't look at the 200 number very strictly.
Makes sense. It's more about what returns you got. And in angel investing, I've heard a lot of people say this, that it's more about the impact that you create on the company that you're investing in rather than just the return that you'll get in few years. Let's start with the basics. For people who don't know much about angel investing, how would you define angel investing and how is it different from other types of investing?
So angel investing is very unique. Like most of the other asset classes like real estate or equity or bonds or debt or gold or silver or like precious metals, you can literally go and buy the asset. If you have the money, you can literally go and buy the asset. Angel investing is probably the riskiest form of investing because it's illiquid as well. All the others I mentioned are easily available on a stock market or through other mechanisms, and you can literally trade in and out of them very quickly. But for example, angel investing, super illiquid. Like a company takes 10 years to build, there's blood, sweat, and tears that happens, and so many ups and downs that you don't even know if a company that you invested in today will be successful in 10 years. The odds are totally stacked against you. So angel investing is the highest form of risk capital that you can give to a budding entrepreneur who wants to find a scalable and a repeatable business model. So that's the way of looking at angel investing. And that's the definition of a startup as well. Like, I mean, a lot of people are presenting themselves as startups. They might be starting a pizza chain or I don't know, something else which does not fit into the traditional definition of a startup, but people are building it as a new age business. So angel investing should strictly be restricted to things that can scale really, really fast. And that's mostly software companies in today's day and age, because we moved from a world of like atoms to like bits, right? But now, I mean, bits are moving atoms as well. And many, I mean, businesses combine online and offline together. So angel investing, highest form of risk capital to find a scalable, repeatable business model that can grow exponentially and quickly. That's what angel investing is.
And how is it different from, let's say, VC, PE, growth stage investing?
And the one important characteristic of angel investing that I missed, the asset chooses you. And that's why, like, some of the things that matter in angel investing are your brand as an angel investor, your access to capital, your judgment, like many other things, right? Because a founder will not want, all money is not the same in angel investing. Like, I mean, you're, by going on the cap table, which is the shareholding of the company, you're trying to influence the outcome or the trajectory of the company in some way or form. So angel investing, like, I mean, a smart founder will want you only on his or her cap table when they've realized that you can impact the trajectory in a positive manner. So how do you do that? You've either previously invested in awesome companies, or you have absurd amount of capital that you can invest in 100 companies, throw darts and maybe hit one gold mine. Or the next way is to just help out in a way that most founders will just refer you to other awesome founders. So it is, somebody cannot wake up to tomorrow and say, I want to start angel investing. You really need access to the best founders. So find your advantage in this thing. Otherwise, you are best positioned to do angel investing via online platforms like AngelList India, where people do the work of sourcing these opportunities and want to monetize their access and judgment by opening up the deal flow to you. So those platforms are a great place to start investing online. They're like the Zerodha of private markets. And if you want to become more active, you want to learn with founders and stuff, then you got to do the whole shebang. Like go to events, find founders. Why will they trust you? Either build an awesome tech company and they trust you because you've built something awesome in the startup space, so your knowledge is valuable that way. So it's a tough journey. It's a tough journey. And I mean, it's lucky as well. I mean, if you do 10 investments in a year in your first year and you hit like 2 of them and one of them is like a unicorn in the next 5, 6 years, then people will think, oh, you're an awesome investor, like you have some magic powers and stuff. But most angel investors tend to give themselves too much credit. Same for VCs and other investors as well at the startup stages, because somebody is a good investor or an angel investor is saying that, 1 out of the 7 Powerball numbers in gambling, right? Or the lottery tickets. You can literally just improve your odds only by 10-20% by being a great angel investor. Everything else is all ups and downs. Like, Uber was not profitable for so long. It eventually became profitable very recently, but it had its share of ups and downs. Like, the founder was kicked out and they were not profitable for a long time, and availability of capital versus Lyft. Like, imagine somebody who had invested in Lyft, which is the other competitor of Uber, versus Uber, right? How do you know which one is more successful with the same amount of capital going into these companies at that stage? So yeah, it's all, to be honest, if somebody asks me, should I do angel investing? No. That's the short answer, basically.
Wow, that was my next question, that why would anyone want to do angel investing then if
Different
there's so
intentions.
much luck involved?
There is different intentions. Like, some people just want to honestly give back. Those are like the gold standard of happy people in this world. There are not many. Like, everyone eventually thinks that they will get rich early. And also it's like bragging rights. You get to post on LinkedIn, hey, I invested in this company, now it's growing like this, like XYZ. So it's bragging rights as well. And the tech people are, of course, very, very open to risk as well. So that's why they want to get into, you won't see like a traditional family office like Haldiram and stuff go into angel investing because it's not worth their time. But a founder or an employee who's made money through ESOPs and new age companies typically tend to be more risk on. So they're like, let's start backing the other founders. You're in Bangalore, like sitting at Third Wave Coffees, and like everyone's talking about startups. Oh shit, I need to find the next Zepto as well. So you get into that flow of things. But honestly, odds are stacked against you. Like, how many Zeptos were started in the last like 3 years? Like, literally there's one. So odds are really, really stacked against you. Financial returns globally for angel investing have been between 20 to 27%. I think the Cambridge report that came out, I think that info is dated. I don't know which report was it, even if it was Cambridge or something else. 22 to 24%, sometimes even going up to 27%. That's the annual return you should expect from angel investing. Of course, the best angel investors make like over 100% as well. Like, my investing for realized, unrealized paper gains is much more, but like realized is over 62%. I did the maths, I think 2 weeks back. So that return I can't ever get from a public stock market portfolio, right? Because I don't know what's happening. I don't want to read like balance sheets and stuff. For angel investing, I got lucky, but I don't know many people around me who did. Like, of course, there are some brand names like Kunal Bell, Kunal Shah, but they're running like great tech companies, and people come to them, a founder comes to them because they want their brand on the cap table, not because they want their money. Like, it's more their brand. So figure out what's your advantage as an angel investor before getting into the whole thing. And zooming out a little bit, when I started angel investing in 2014, it was not cool. Like, my family thought I was burning money or putting money on like a bonfire and just lighting money up. It was not big checks, but still they were like, "Ki, why not invest and spend time learning balance sheets from like BSc and SE?
Or start or join the company,
Or
the
join
business
the
itself."
company." So all of those questions existed back in the day. Now it's cool to be because of Shark Tank. So everybody wants to be an angel investor or like this thing. So back in the day it was tough, but real returns in life actually come from being ahead of the curve. Like, I was angel investing when it was 2014. Now every angel investor has a podcast, has a newsletter, has a Twitter following. I've literally done 700 tweets in my life. Like, so uh, so I've never written a newsletter or a blog post or had my own show. So it was easy to differentiate then. But if I were to start now, you would be entering the world of these new age, like influencer angel investors, and competing against them, it's going to be tough.
2-3 questions on this.
So be ahead of the curve. Like, be it angel investing, be it starting a podcast, be it running a newsletter, be it building a business, I think it has to be ahead of the curve and new and unique. Like Peter Thiel says this very uniquely, that be a monopoly. Like, you don't want competition in life, in business, in anything. It comes eventually. But as long as you can be a monopoly or a duopoly, I think you're good.
If you were starting out something today, what would be that thing which is ahead of the curve right now?
I wish I knew that answer, but what I'm running right now is a company called Offline. It's a community business, and people think that it's just a community business, although we're a very premium, top 10% tech founders of India, like Swiggy, Ultrahuman, Zomato. All of these companies are members, my other co-founders. And the network effects are so strong that people don't realize this. So I was studying these membership communities called YPO and EO. And they are like cults. They have not spoken about themselves too much. They charge like a bomb. Like, I mean, Bombay YPO is like a crore to join. And people line up just because of prestige, but because also of the network effects and the help that they get. Like, Ambani is a member. Like, so imagine getting to have like a dinner with him. That in itself will open up business possibilities, and people are super helpful. I was like, why doesn't something like this exist for tech? Because it's existed for 5 decades, run as a non-profit, global. You can meet the founder of Walmart through it, and like those set of people. So I was like, something like this needs to exist for tech. Like, I mean, people in tech want to help each other out. So let's build a community business. But once the network effects are so strong, there can't be a second offline, because somebody to catch up to offline, they have to really be 10x better than us, right? You can't like pick people out the whole network at once. Like that way, I mean, to replace Instagram or Twitter, you can't start an alternative social network because the network effects are so strong. So we're building the community, and then eventually the aim is for this community to have services that we build on top, and then a product. Most people go from product to community. You see these SaaS companies have their own Discord servers, Web3 projects. I'm saying let's start with the community of the best minds in the Indian tech. Imagine what that network will be worth once you build services and products for them. So that's what I'm doing. I mean, it meets many of the checkboxes that I think of when I invest in a business. Monopoly, unique network effects, pricing power, the lack of competition because of that, this thing. So all of those checkboxes are met here. So identify a a white space. I think there are so many white spaces, but I mean, identify the problem, live with it, experience it. Like a lot of founders actually go into this thing that, oh, AI is hot, let's do something in AI, right? But trends fade out as well. As quickly as they come in, they fade out as well. Like in this age of information overload, trends are accelerating. Like pehle, if you were making a railroads company that lasted for 50 years, an AI company might probably last like 5 years. Like, I mean, the rate of change and rate of change of wealth also is increasing so much. Like, I mean, the first billionaire probably took 100 years. Like Mark Zuckerberg took 6 years, 7 years with a laptop and team of 19, 20 people to do that. So all of this is accelerating. So unless you're finding something that's unique and differentiated, you will not stay with it for long enough. So I think stay with the problem, find something unique, and think about it and obsess over it. Like that's the only way to be successful in whatever you do next.
And
I don't know what the answer is, but yeah.
yeah, I get that. And how do you go out and search for these ideas? I mean, yeah, you read a lot, you listen to a lot of conversation. What do you do to find these ideas?
Observe. Like I think reading and all the intellectual stuff that's already done, I think you will mostly be just catching up to what's already out there. To be ahead of the curve, I think you really need to observe. Like you've got some of the smartest minds working with you as peers and colleagues and your classmates at ISB. See what problems they're talking about. And sometimes they won't even say it explicitly.
Yeah.
Right? But it'll come to you. Like at offline, like I was like, here, all these startup events, everyone's bored. None of the best founders come out because it's just visiting card exchange from junior founders to senior founders, and nobody is like really deriving any meaningful value. Where is that depth of conversation? We've come 10 years into this ecosystem. in our journey, but we've not really had people sit down and talk about their childhood trauma, like what's going wrong. Like everyone is like, "Ki bro, company to macha rahi hai," right? So you really need those stories of highs and lows as well to come out for people to be bonded and vulnerable with each other. And that's what I noticed going to these events week after week. Like open bar, 150 people, visiting card exchange, and come back with 50 visiting cards and done. Like I want to know lesser and lesser number of people. And I realized that as people mature in their careers and journeys, they will want to know lesser and lesser number of people, but focus less on the width, but more on the depth. So that was the problem that I observed. Nobody told me explicitly कि ये problem है. So that's when I was like, yeah, this can be something that I build next. And how does this become a big business? I'll still figure it out. This thing, I mean, I don't have a grand 5-year plan. I don't have a grand 6-month plan. Like I just know that what we have to do this quarter and what we have to do to build for that and all of those things. So that recent interview that I did with Tim Ferriss, he said that have 2-3 parallel obsessions as well. And not one single obsession, because you sometimes will, exploratory obsessions, you might not find the outcome that you're looking for with that exploration. But having 2-3 parallel things, sometimes they might join together.
Yeah, makes sense.
So have a creative thinking mind, go observe. Like, people don't even tell you what the problems are, but you just got to read between the lines.
Let's go back to angel investing a bit. But before we go into the process of angel investing, I want to ask one technical question. How long is the life cycle of an investment in angel investing?
So typically it varies. Like because you're one of the smallest checks on the cap table, and cap table is the shareholding table for the listeners. Like I'm guessing most people would know that already.
Yeah, we will put a definition as well in case.
Perfect. So just double down on anything that I need to explain, and I'm happy to do that. So you're one of the smallest investors on the cap table. So typically, if a company is super hot, within 2-3 future rounds, you will get an exit opportunity. Like if you were in Zepto as an angel, by the next, I think, year or so, you would have received like 10 offers to buy this thing. And those are the companies you should not exit. Because in venture capital and startup world, there is something known as power law distribution, right? The rule of 80-20 in life. Like 80% of the returns in life will come from those
20% of the investments, yeah.
So same in investing as well. And that's very, very crucial. Like literally, if I look back across the 180, 190 investments and the returns and like this thing, there are 3 investments which have resulted for everything that I've earned over this angel investing career of like 11 years. So hold on to your best winners because they compound really fast. Like they might be 2x now, but next 2x will be 4x and next one will be 8x and then 8 to 16x. So really hold on to the winners, but of course exercise good judgment. You can always take some chips off the table, like sell part this thing to at least you get your principal amount back and then you can let the rest ride out if there's an option. So ideally, like, the journey is, to cut it short, like between 3 years to like 8 years. And sometimes if you hold on even longer, like maybe over 10 years as well, but 3 to 8 is what you should expect. And this is money written off. Like once you do that, assume that this is play money. Do not trouble the founder. Like do not ask him for updates and stuff. The founder has to explain to the founder why regular updates are nice so that you are aware of what's happening in the company. Maybe you can help him or her out. So expect regular updates and just gently nudge the founder if he's not doing that. But don't expect anything in return. Like that's the one thing that I've learned. Like just assume that this is money.
What are those 3 companies that you just mentioned?
CoinDCX, Bharat Pay, and Sugar Cosmetics.
Yeah, makes sense. You mentioned this in Jeevan's podcast that someday you would want to write a chapter for every investment you made. And I just wanted to use that to explain the audience what is the process of angel investing, of securing a deal, from finding the business to securing a deal. Can you take us through a behind the deal story where you found a company? How did you find that company? What all did you do and secured the deal? And maybe we can cover the exit also if you have exited.
So a book is coming out where I'll talk about some of these investments, and we're doing it's a very unique format. We've signed up with one of the biggest publishers as well in India. So I think globally actually, and they're coming out with the book. I'm hoping if things go on track and I'm able to do all the chapters in time, I think by end
You're
of
the
this
sole
year,
author of the book?
I'm the sole author of the book.
Fantastic.
So yeah, I was like, I mean, my life is not that interesting that it should be in a book, but like apparently the publishers think so. But so this one, CoinDCX, super interesting. I was at an offsite. I was just hired by AngelList, Naval Ravikant in 2016. And I meet Naval for, I think, the first time, like in person. And I mean, we just get talking about like different things, walking along the beach and like at night. And he mentions this thing called Bitcoin in 2016. And I mean, explaining the thing. And he was like super enthusiastic about it. And I didn't have a single clue. I'm like, what good can this be? Like, I mean, and that's when you should actually pay attention. When some of the smartest people in the world are talking about something and you're ready to brush it off just because you have one piece of information of the full puzzle, listen to it. Like, all right. Then I come back from the retreat in, I think, May or June. And then my colleague from AngelList US is visiting, helping with the setup and a couple of other things. And we visit Goa. And I end up spending for the trip. And he's like, oh, it's tough for me to send an international wire. His credit card wasn't working because of demonetization, which just happened in November. So he wasn't able to withdraw from the ATM. So then he's like, why don't I send you a Bitcoin? And Bitcoin back in the day was like 54,000. I still have that email copy printed on my desk. 54,000. So he's like, yo, you spent this thing. So I'll send you 1.5 Bitcoins for the trip.
This is the first time I'm hearing a transaction of INR happening with a Bitcoin.
Yeah. So I hope this is legal. So that happened. And then January 2017 onwards, like just 2 weeks after this whole thing, I just kept the money there because I didn't know how to withdraw this also, right? I mean, so I was like, okay, let's just keep the Bitcoin, 1.5 Bitcoins. Kept on rising. Like, I mean, January 2017, it started rising. And that's when I pulled out all the books, the podcasts, and anything that I could, content that I couldn't find about the whole thing. Because anything that you see go up 20, 30% in a month, you will pay attention to it.
Yeah.
And that's what, I mean, draws a lot of people into these new like meme coins and NFTs and stuff because it goes up so fast, right? Nobody wants to pay attention to a stock that's growing up like 8% in a year. So I was like, man, this is insane. Like I just like, I mean, almost made double my money on a Goa trip like that I did with my colleague. And so then I started paying attention to this. And then I tried finding out place to buy and sell Bitcoin in India. Then there were these crypto brokers like in India, like Unocoin and stuff.
There were?
Yeah, Unocoin tha in 2017. And they were charging 30% premium. Like Bitcoin global price was like, say, 50K, rounding off. Then they were selling for 65, 70K, just that pure arbitrage. So a lot of people in the early days made money by buying crypto in Korea or Canada and sending it to India and selling at the higher price.
Wow.
Yeah. I mean, so people did that arbitrage. So I was like, this is just absurd. Like, just because I'm sitting in India, I don't want to pay like 40%, 30% more. And then I started posting about all of this. All those blog posts are still live on my Medium blog post. One of the rare times that I posted about something because I was so excited about this. Like, and this was in 2017. Then I discovered like different mechanisms of buying. Then I found somebody in Hyderabad, these like tech firm, which started selling me Ethereum at like 200 rupees and 2000. I went bought up until 2000 rupees. And I started posting, I bought all of these. How do I sell? Like, how do I do real price discovery for them? Like, I mean, in the sense that if it's $2,000 in the global market, it should be sold for $2,000, right? Not like 1,500 or 2,500. So that's when on a Sunday, on a Twitter, like this thing, my inactive, like very passive Twitter account, Sumit of CoinDCX, who's the CEO, messages me, hey, we're launching very soon. You're going to have the best liquidity in a multi-order crypto exchange order book on this platform that we're launching. It's called CoinDCX, built by a team of IIT Bombay kids. I spoke to him on Sunday itself because I was so excited. I was like, message, here's my number, like, please send me a deck or like, just call me right now. He didn't have a proper deck ready back in the day. I think he was still working with one of the angel networks to close his round and not making much success. Called him on Sunday night. We spoke, got excited, got the technology vetted by a friend in the US who's way more technical than I am. And
within how many days?
2 days. And Tuesday, I think I gave him an offer on email. That agle din, and I invited some of the best names in the country to come co-invest with me. By then, like people had trusted me because AngelList had launched and all of that stuff. Next week, Tuesday, I was having lunch with a work friend RBI notice comes out that banks have decided to shut off access to crypto companies.
Oh.
So everyone, that shadow ban basically, which happened in 2018. So crypto was like a strict no-go. So all of these top investors like, man, this is untouchable for us right now. So we won't be able to do. Then I'm like, man, yaar, ye to karna hai, but I'm still very passionate about this space. And that was a true contrarian bet at that point of time. Like people talk about like how you need to be contrarian. I'm like, screw the regulations. Like I need to find 7, 8 other people who are interested in investing. I called up Sumit ki we will still invest. I will find the other 7, 8 people to come in with me. I'll increase my check size. Let's reduce the valuation to adjust for the risk that's come in now and all of those other things. And we're still excited. I think it took me 10, 15 days. I got people from my master's course to come invest with me, 7 of them total, including me. They're all multimillionaires now. And they still thank me to this day. And we invested in CoinDCX at a very, very early valuation. Like, I mean, it was under 10 crores. And now it's a $2.1 billion company. Returns have been over 1000x. And
That is quite a story.
So, yeah. And after that, now things for crypto turned around. Market is booming. Many cycles have happened in crypto, ups and downs and stuff. And now we know that, I mean, Bitcoin's 100K. Like back in the day, Bitcoin was like $2,000, $3,000, $5,000, $10,000. So yeah, industry's grown, and with it, CoinDCX as well. So that was one of my most profitable investments, and that's the story behind it. On a Sunday, like, I mean, most VCs, you cannot get them to do a call on a Sunday.
And always imagine that it would have taken you weeks or months to evaluate that idea, the business, but a lot of work happened before that, before you found CoinDCX, I think.
So exactly, coming with a prepared mind. If I didn't know about the crypto space in general, my first reaction would be, this is no, right? I realized the problems are there. Like, I mean, nobody can buy, sell crypto exchange tokens in India instantly. Somebody has to solve it. And eventually regulations will turn, because this is a global phenomena. It's not going away anywhere. It might get regulated in different forms and factors, but it's staying there. So coming to an investment with a prepared mind, I think was the key. And at seed stage, you can only bet on the founder. And by that time, I'd done 20, 30 investments. So my gut was getting refined. Like that gut sense was getting there. Like I could say that this founder is got the hustle and drive. So all of the companies, I would say 70% of the companies that I backed, I would back that founder again, no matter what he or she does next. Just because you know your gut about that founder is right, ki on a long enough time horizon, he or she is going to make it. So Sumit was that special founder as well, where he was like, boss, you build an ice cream business, I'll invest in that, because you just know it, like ki, that energy, drive, intelligence, integrity, all of that, like when it all comes together, it's just a volcano of like awesome things.
So what you said about preparedness, this is what we call a thesis also in the investment space, no?
I didn't write a single memo for
But like
CoinDCX.
your ideas, the thoughts that have shaped up. No.
To be honest, not really. Like I think thesis is thinking about the future without like living in it. Right? Your job as a venture capitalist, I'm differentiating between angel investors and venture capitalists. A venture capitalist is to find pockets of the future which are exciting. You can't write about it. You can only experience the future. Because if you could build the future, you would be building it. You would not be a VC. Right?
Got it.
So you need to find pockets of future which are exciting. Like, I mean, how Snapchat happened in the US, right? Your son sitting on the table for that investor who did Snapchat from Lightspeed. He's using this app which is like used by teenagers in his college. And he's like, what is this thing? He's like, this disappearing photos. And then he's like, this is cool. Is everybody in your college using it? Yeah, they're using it. So you've discovered that people are using it there, and soon the world is going to use it. So you got to like invest in that. So yeah. So thesis, I think it's just intellectualizing the whole this thing, because you have to spend 9 hours at the office. So you need to produce like PPTs and act like a consultant. But honestly, the best deals are done on the fly. Like, I mean, nobody could build a thesis about Uber, right? I mean, Uber itself couldn't build a thesis for Uber. Like they said, we're going to be a $1 billion company. Now they're a $100 billion company. So on their deck. So you can't predict how these things play out as well in the future. You can just experience it and see if you're open with a prepared mind to do it.
Got it. As in, when you just started out angel investing in 2014 or 2016, how did you find these businesses or startups? Were you part of a community, networking, even before AngelList happened for you?
All right. So I'll mention the names. So I started, I was one of the youngest angel investors. So I discovered angel investing via this thing called Indian Angel Network. These offline communities where pitch sessions used to happen in person. That I think was the angel investing 1.0 in this world, where you meet in person, a founder comes and pitches every month, 3 founders on a Saturday morning, and people get to ask him or her questions. I realized that my peer group there was much older. Of course, they had the money and the time to like spend time. But I think for these new age businesses, you really need to have like a different kind of persona, to be honest, where you're like, uh, you've experienced some form of technology, you're involved in technology, you're faster with your stuff in terms of technology. So I realized wasn't there. Then this online platform called Let's Venture. So I started consulting for them because that for me was 2.0, where people from like say smaller towns could invest in a founder building in Bangalore as well. And everything used to happen online. And because if you're investing in technology, it better be online. And then I realized, so while at Let's Venture, I started doing more deals and stuff. But all my deal discovery was either of these two platforms. That's when I started posting actively on LinkedIn and Twitter. Not actively, but like just going to events and stuff. I realized because I need to have an independent brand instead of any platform or community that I'm attached to. So that started off very early, like 2014, 2015. I started blog posting with like other things as well, things that I would love to see in the ecosystem or building a thesis. I didn't end up investing in any of those, but I was just trying to get noticed. So I did that very early, and that really helped in getting founders to know you. And once I've like done like 50, 60, 70 investments, spoken about some of my successful ones, then people know that they associate you with success. They don't know, I mean, we've spoken about CoinDCX. Do you know how my 189 other investments are doing? No. But you'll always remember the success because you only have to be right once in this industry. Which other industry or job or career will give you that opportunity? Right? Like, I mean, so much hedged. Like, I mean, my risk is literally so much hedged. So hedged. So, yeah, I say that find your groove. I think it can be through building a business, building a brand, or showing good judgment, and people will eventually find you. Like, but other than that, I mean, there are smaller ways. I mean, online forums tell you a lot. Like, I mean, get connected with some of the angel investors who are up and coming. Send them stuff. Like, write a thesis or a memo and send them that, hey, this is what I thought about this industry. This is what I think about this company. Would you like to read it? Like stuff like that. People, I mean, and Gen Zs right now are expecting value before giving value. I mean, that's a alien concept. Like, I mean, to me, you have to give value before to get value. Like, I mean, there are so many emails that I get which are entitled, hey, can we speak like 15 minutes or 30 minutes? No, bro, like you cannot. Like, I mean, that level of entitlement, I think in this Gen Z or the younger crowd, I think is a lot. It's there. It's there. So do the work, rewards will come.
Got it. And for someone who's planning to enter this space, they can either go out, talk to people, similar angel investors who are up and coming. They can join some communities or build some thesis or some ideas of their own and pitch it to people. That's how they can enter this space and get their first hook, maybe. First
Find your
company.
why. Like, I think anything that you do in life, like find your why. Like, I mean, being in a relationship, being at ISB, being in angel investing, find your why. Like, do you want to make money? Do you want to like have impact? Do you want to like lead a happy life, or do you want to just have a credential from ISB? Like, find your why in anything. And that's the real purpose that will stick with you as you go through ups and downs in anything in life. So I finding that why I think is super important. And apart from that, I mean, it's much like life. I think it's learn as you go. Like,
Yeah.
I mean, I had never read a book on angel investing. Like, I mean, my first investment, I didn't know some of the terms that existed. And now you have tools like ChatGPT. I hate it, but taking away all the creativity from this world. But there are tools like ChatGPT which can tell you about any clauses, right? I mean, pehle I had to call up some lawyer connection, friend, this thing to help me out, help me understand some of these terms and stuff. So I
All of
learned
that
as
connections.
I just learned it as I went along. Like, so I wanted to invest in that company, so I found a way to learn and all of that stuff. So most of the things in life, like the best careers in life, you are self-taught.
In this part of the episode, we talked about what does angel investing mean, why did Utsav Somani become an angel investor, and his crazy story of investing in CoinDCX. In the next part of the episode, we are going to talk about how to find the companies to invest in, how to secure a deal, why did Utsav reach out to Naval Ravikant to bring AngelList to India, and his networking principle. If any of this excites you, please subscribe and stay tuned for the next part of the episode. I also want to hear your thoughts, your feedback, your criticism. So please drop in a comment or a message, and I want to create more value to you. If you think this is of value to you or someone you know, please share and help me reach more people. Thank you so much for joining in.